One of the reasons I made this channel was to help people make better decisions. Every day I see people doing things that perplex me. I see people doing things like getting enormous loans that they'll never be able to pay back. I see people investing in stocks that have very little chance of future success. Now, the purpose of this video is to hopefully save people from losing a lot of money, and in fact, to help them to make a lot of money. Disclaimer, I am not a qualified stockbroker or financial analyst, but I do seem to have a fairly good track record of predicting future success of the stocks that I've personally bought and recommended to others. Hello, my friends. Welcome to the channel. You are watching The Electric Viking. My name is Sam Evans and I'm coming to you here from Melbourne, Australia. Welcome to, well, planet Earth. Isn't it an amazing place? Every day of the week, there is new information on all kinds of things, electric cars, batteries, such awesome technology coming out constantly. Every day, I could literally make 100 videos. There's so much good news going on. Now, for some reason, most of the main sites, including Electric, Inside EVs, and many others, often don't report on Chinese cars. Specifically, they don't often make much mention of BYD. Now, that trend has started to change with websites like Clean Technica reporting on BYD as a company. However, most people in the West have still never heard of BYD. And if you're new to this channel, you might not have heard of them either. But if you're not new to this channel, you'll know, and you probably might have even bought the stock by now, that BYD is now the third largest automaker in the world by market cap. Just passed Volkswagen last week. For damn good reason. It is the most vertically integrated company on the planet. It is also the third largest battery manufacturer. And they just happen to be making the battery chemistry of the future. That is lithium iron phosphate batteries. Now, I'll put a few videos in the links below showing you why that is the battery chemistry of the future. If you don't already know that it is, then you need to know. Now, although Seeking Alpha publishes a lot of absolute nonsense, because some of their authors are, well, very biased towards certain things and have perceived or very real biases against certain companies, there are, however, a couple of authors on the site that I highly respect. And one of them recently wrote an article called China's Leading NEV and Battery Manufacturer, Why You Need to Buy BYD. Now, BYD Company Limited is one of China's leading new energy vehicle and battery makers, despite the entries of emerging leaders like NIO, XPeng, and Li Auto. In fact, I don't think Li Auto is a leader at all in any way. I'm not sure why they're one of the three unicorns. I don't recommend investing in them at all. There's plenty of other companies in China that are positioned much better than they are. BYD's leadership at the top of the pyramid remains secure though. In fact, they are without doubt China's most successful electric vehicle company right now. BYD's leadership has been cemented recently with incredible growth in electric and plug-in hybrid vehicle sales. Its NEV installed base continues to grow rapidly. And most importantly, it is already profitable. Now, I had people asking me the other day saying, hey, Sam, why is BYD, why has their profit gone down over the last quarter? Now, the funny thing is, you couldn't say the same about most companies in this emerging industry. Most companies are losing billions of dollars, whereas BYD is actually making a profit. So while it was a good question, it's still interesting to point out the stark difference between BYD and many of its competitors who don't even make a profit at all. Now, as the leader of China's rapidly growing new energy vehicle segment, BYD looks incredibly well positioned to leverage its market leadership. Moreover, given its solid profitability and well-diversified portfolio, cars only make up less than 20% of their actual output. It's insane. JR Research says that we believe automotive investors can benefit from adding BYD stock to their portfolios. And I've been basically begging people to do this for the last 6 months. Those of you who have, kudos to you, because obviously you didn't just listen to me, you did your research as well. We discuss here in this article whether it's appropriate time to buy BYD stock, even though it's already doubled this year. Now, BYD stock has outperformed its leading EV peers so far in 2021. Its year-to-date return of 45% puts it ahead of Tesla stock's 43.6%, as Tesla's stock upward momentum has subsided lately. Now, notably, BYD stock is also significantly outperformed its Chinese pure play NEV peers. It may be helpful to note that BYD is not a pure play EV, as it has a very small percentage of oil-fueled vehicles in its automotive portfolio. That percentage has shrunk every single month this year. It's about 8% now. Now, the recent results for China's October new energy vehicle sales continue to demonstrate the market leadership of BYD. The company's year-to-date deliveries through October 21 easily surpassed the other leading Chinese pure-play NEV automakers. BYD delivered 418,600 units year-to-date through October this year. In contrast, NIO, XPeng, and Li Auto collectively accounted for just 199,500 units. So BYD accounted for more than double NIO, XPeng, and Li Auto combined. Now, in October, BYD's year-to-date deliveries for its new energy vehicle portfolio grew a phenomenal 212% year-on-year compared to last year's 134,000 units. Now, any talk about BYD's impending demise is utter nonsense. Despite the penetration of emerging new energy vehicle makers led by NIO, BYD is well perched atop China's new energy vehicle pyramid. In fact, I think it's atop the world's global pyramid in terms of its ability to produce quality vehicles at the lowest cost anywhere on the planet. Readers must understand that China's rapid new energy vehicle adoption is creating massive secular tailwinds, driving the sales of its leading new energy vehicle makers. Now, remember, China is the world's largest auto market, the world's largest electric car market, by far is in China. It's also the world's fastest growing market in terms of actual physical sales increase per month. Bloomberg NEF estimated China's new energy vehicle penetration of new car sales would reach 25% by 2025. But honestly, looking at the market right now, that seems ridiculous. It's already ahead of China's industrial projection of 20% by 2025. Now, put this in context. China's new energy vehicle share of new car sales was only 6% in 2020. So initially, those estimates made looked ambitious, right? When it was at 6%. Even for a country like China, which has made NEV adoption a policy of national significance. Why do they do that? Well, they know that they're going to dominate the industry. They're already dominating the industry. And if they make it policy of national significance, then what can they do? Dominate global automotive industry, right? That's the plan for China. However, China's incredible momentum in electric car penetration kept on surprising to an insane upside this year, increasing every single month. In September, new energy vehicle sales reached 20% of all new car sales. On average, the penetration rate was 13% for the first 9 months of the year, but it keeps on going up every month. The initial estimate for Bloomberg NEF for 2021 was just 9.4%. Therefore, it's clear that China's EV market has significantly outperformed Bloomberg's NEF's estimate so far. Now remember, Chinese buyers actually don't like plug-in hybrids or hybrids. The percentage of new energy vehicles sold in China that are hybrids or plug-in hybrids is very, very low. Of that 20% that were new energy vehicle sales of all car sales in China, less than 2% were plug-in hybrids. Clearly, when buyers have a choice, when they can buy an electric vehicle for the same price as a plug-in hybrid, they choose the electric vehicle. Now, notably, BYD founder Chanfu Wang estimated that NEV will account for, new energy vehicles will account for 70% of new car sales, at least at a minimum in China by 2030. In addition, NIO founder William Li projected a 90% penetration rate in 2030. Now, Bloomberg NEF estimates put it at about 48.4%, which is utterly ludicrous. My estimate in China is a 90% penetration rate in 2028. Given the incredible momentum so far, I wouldn't be surprised that China's EV makers' estimates could be far more accurate than Bloomberg NEF, who are historically wrong in almost everything they say because they represent the mainstream media. Therefore, JR Research, author of Ultimate Growth Investing, says that they encourage investors to continue monitoring China's top new energy vehicle leaders' delivery growth cadence, particularly BYD's. BYD is also the number 2 battery supplier in China behind only CATL, the world's largest battery manufacturer. BYD's well-diversified portfolio also consists of its prowess in battery technologies. It's the number 2 player in China. It could be the number 2 player worldwide within a year. Based on my projections, that's likely to happen. Behind only the world's largest battery supplier, CATL, it also places the company in a prime position to benefit from new energy vehicle sales of its peers. In addition, BYD's battery technologies also encompass lithium iron phosphate blade battery packs. LFP is becoming increasingly crucial in EV batteries as it helps to drive down the battery costs for standard range vehicles significantly. Now, there's ridiculous reports out there saying that ternary batteries, NCM, NCA chemistry batteries are only about 10% more expensive, which is nonsense. The truth is that LFP batteries are on average around about 30% cheaper. In some cases, 40%. It's a huge difference. Now remember, knowing you have an electric vehicle which has a battery which will last for longer than the life of the car is something that many buyers like. They like to think of the fact that it doesn't matter how many times they charge their vehicle. It doesn't matter if they charge their vehicle to 100% or discharge it to 0%, that their battery will last longer than the life of the car. And that's what LFP batteries do. So therefore, LFP batteries are immensely beneficial in helping to drive electric vehicle adoption. Obviously, if you bought a vehicle and you thought, well, this vehicle is going to last me 1,000,000 kilometers or even 600,000+ kilometers, or if you bought a petrol vehicle, you know that they're only going to last you on average about 300,000. It means really the electric vehicle, if it's on price parity with ICE vehicles, is way, way cheaper. Now, this is one of the things driving electric vehicle adoption in China. ARK Invest noted in a recent note that LFP costs will continue to fall dramatically over the next 5 to 10 years. Moreover, if LFP production can ramp successfully, it could fall even faster than nickel cells, increasing LFP adoption, ARK said. LFP batteries are less expensive than those with more nickel-rich chemistries. If LFP battery production were to ramp at the same pace NMC batteries did from 2016 to 2021, according to Wright's law, the LFP battery cost would decline nearly 37% from roughly $65 per kilowatt hour to $41 per kilowatt hour. ARK believes that Tesla is positioned uniquely for LFP chemistry because of its industry-leading drivetrain efficiency. Superior efficiency suggests that, unlike its competition, Tesla will offer acceptable range at lower prices with LFP batteries. Now, I made a video about that happening, about Tesla being able to pivot to lithium iron phosphate batteries quicker than other automakers. I'll put a link to that video in the description below. But CATL and BYD are the leading producers of LFP batteries worldwide. Therefore, Tesla will have to rely on both companies for LFP supply as it ramps production massively in the years ahead. Now, BYD doesn't need to buy these batteries from anyone. Therefore, they are paying less per kilowatt hour for each battery than any other car company in the world. Tesla was reported in August to have entered an agreement with BYD to purchase about 10 gigawatt hours of its Blade battery packs. Although there wasn't any official confirmation, both companies didn't deny the rumor. I made a video about that too. I'll put that video in a link in the description below. Moreover, Tesla has often telegraphed that it will get its hands on any battery supply its suppliers can provide. The company expects to ramp its annual production from just 1 million in 2021 to 20 million by 2030. Considering that standard range vehicles would be their core products, Tesla would need a massive amount of LFP batteries. Now, in my recent video projecting the car market in 2030, I mentioned in that video that there will be 3 big automakers worldwide in 2030. The biggest of those will be Tesla, and equal second place will be Volkswagen and BYD. Now, recently, BYD has actually increased the cost of its batteries to other purchasers massively, very, very enormously within the space of only a few days. Now, why do they do this? Because they have too much demand. They're doing the exact same thing that Tesla does. When it has too much demand for its products, it increases prices. Now, moreover, I have not included the demand from the other OEMs. For example, Volkswagen and Ford have also been reported to be interested in using LFP batteries. Therefore, the future looks extremely bright for BYD to leverage its new energy vehicle portfolio in China and globally. Therefore, the future looks bright for BYD to leverage its new energy vehicle portfolio in China and around the world. Now, what about growth? Well, BYD is growing at an insane rate. Its vehicle sales have increased 5 months in a row this year by 10,000 every single month. And that increase hasn't been in diesel or petrol or gas cars. It's been purely in electric and plug-in hybrid cars. Now, the company's new energy vehicle portfolio has continued to drive its top-line growth. Given China's new energy vehicle penetration momentum, we think that BYD can continue to grow its revenue robustly moving forward. Moreover, it's a profitable automaker. That's important for growing. To grow, you need cash. All of China's pure play new energy vehicle players are still running EBIT losses. China's leading pure play NEV players have to compete against BYD. Therefore, it shows the tremendous execution capability and scale advantages of BYD with its vertical integration. Now, BYD is incredibly well positioned to leverage its scale advantages to drive down operating costs even further. So the question is, over the last 12 months, BYD's stock has almost doubled. Should you buy it now then? BYD's revenue is estimated to grow by a CAGR of 31.5% from full year 2020 to full year 2023. Therefore, the consensus estimate also concurs with my thesis and that of Ultimate Growth Investing. BYD will continue to thrive as China's foremost new energy vehicle leader. And like I predicted, it will become one of the 3 largest automakers in the world by 2030. Notably, it is also estimated to continue improving its operating leverage as it scales up. I believe that BYD's scale advantages put it a few steps ahead of its closest Chinese NEV peers. In fact, I think it's a step ahead of everyone except for potentially Tesla. Coupled with its prowess in lithium iron phosphate battery technology, the company is well primed to lead China's new energy vehicle surge over the next 10 years. Now, based on Ultimate Growth Investing's fair value FV estimates, BYD stock is not expensive. Although it's trading well ahead of its 3-year NTM EBIT mean, the market has priced in a premium for BYD's leadership position. While it's no longer cheap, it's still reasonably valued now. Whereas companies like Lucid and Rivian are most certainly not reasonably priced. Therefore, if investors do not have exposure to Chinese EV market yet, I encourage you to add BYD stock to your portfolio now. Don't wait, strike while the iron is hot. Now remember, all of this has happened this year. BYD's incredible growth in electric vehicle sales has happened this year. Their ability to discard sales of petrol and diesel and gas vehicles have happened this year, while their growth in EV vehicles has happened simultaneously. And yet, they have an entire new range coming out on the market right now within the next few months, which will be far, far better than their existing vehicles on sale. Now we can see some of that new range with the new Yen Plus and the new BYD Dolphin. BYD sales of the new Dolphin vehicle hit 6,000 in its first month alone. Ramp up of that vehicle, which I believe may be the top selling vehicle globally in 5 years' time from now, considering it will be a global car, looks to be in full swing. Now, by the time BYD are offering 10 plus affordable electric cars in at least 20 to 30 countries, which they will be within 5 years, BYD will become a name that becomes synonymous with affordability and electric cars. Hope you've enjoyed the video. Thanks for watching, and I'll see you again on the next one. Bye-bye.